we are here today as the Wolfpack. That's our name?
That's the Wolfpack, just the three of us.
The Wolfpack, just the three of us.
Our debt is growing $1 trillion every 100 days.
There will be a future where entire billion-dollar companies are run by one man.
I would never discourage anybody from trying to find money just because they don't have any money at that point in time. That's the beauty of this country, is that there is money around. If you have a good idea and a dream and an execution plan, you can get money often for that.
Welcome back, everyone. Business Untitled episode. I lost track, but we have been super consistent. We have been grinding. Shout out to Mike. Mike is pulling his weight and getting a lot of guests. Dave has got a lot of guests. I got some guests too.
Absolutely.
And we are here today as the Wolfpack. That's our name?
That's the Wolfpack, just the three of us.
The Wolfpack, just the three of us. So we're going to talk like we talk at home, like we talk at the clubs, well, the social clubs, and we're going to answer some of you guys' questions. But before that, I actually saw something randomly, thought about Dave, and I got Dave a really good gift. Mike, I got a gift coming for you at some point.
Mike
but
does
this
lots of
gift
gifts.
literally
Tomorrow and
jumped
tomorrow and
out
tomorrow.
at me for Dave, and I want him to open it up right now.
Oh my gosh. Whoa. Thank you, my man.
It's like an old school CD.
I'm nervous.
Very hard to get this.
Nervous. Oh, I love it.
It is.
Nas,
crazy
the
is
lost tapes.
Look at that.
He knows I love Nas. One of my guys. Thank you.
That gift might be worth millions one day. Don't break it.
Nas has stayed out of the
never.
flack, too.
Mike, you can have my phone.
Yeah, thank you. Talk about the flack in hip-hop these days.
I love it.
Mel, your buddy P. Diddy is under the gun. Is under the gun.
First of all, I don't even know P. Diddy. Well,
He's under the gun, I'm telling you. If you looked at the
He's
raid
under
in
the
his house,
gun.
they showed up with frickin' heavy machinery.
I thought we had like something planned here.
Mel, can you comment on that?
I don't know anything about that. I know Diddy's sons. They're very nice kids.
Yeah.
I hope it works out for him, man.
Yeah. One thing about this room, it's still hot in here.
We got to get air conditioning.
fucking air conditioner.
All right, let's get going. Let's get
Yeah,
going.
yeah,
What do we
yeah.
got, Dave?
What do we got? Well, let's talk about inflation. It's a big topic, and what it means to financial assets, or how to make money off that, or just what the problems of it are for the economy. Hey. Okay, now you're good. All right.
I'm waiting.
You're good.
So what's interesting is, I've been in markets for years, and we've, macro markets, it's always about inflation and growth and that intersection between how fast an economy grows and does it create inflation, how much debt a country has. And it feels like something's changed in the last 8 weeks. Like the zeitgeist of investing has all focused on, oh shit, the United States of America might be in a death spiral, a debt spiral. And what I mean by that is we have so much debt. We have borrowed so much money, right? $34.6 trillion. Write it on your refrigerator. Mm-hmm. That's what the federal government owes. $34.6 trillion. Yeah. Currently, rates are about 5%, 5.5%.
Yeah.
So 34.6 times 5.5% is a big stinking number, right?
$1.7 trillion or something.
Our debt is growing $1 trillion every 100 days.
So I just heard something today that inflation is finally going down a little bit. So you're saying what, inflation is going to go back up? How do we even get out of this?
Well, so let me.
Does the United States turn into Venezuela?
So we've got $34.6 trillion of debt, growing $1 trillion every 100 days, and then another $1 trillion every 100 days. And so that, the money it takes to finance that debt. It's like when you have an 18% credit card bill and you've borrowed $10,000, you're like, oh shit, all the money I'm making at work is going to pay my interest.
Yeah.
Right? Can't pay for education for young kids. can't pay for military equipment, can't pay for infrastructure, right? When we're spending it on debt service, we can't pay for it elsewhere.
Let
So
me ask you
how-
this. Hold on one sec. Sorry. I'm sorry. Just get into inflation on a broader level. Like, what is inflation? And when you say $35 trillion, in comparison to what? I mean, it's a big country. There's a lot of people. I have no idea what you're comparing it to. So give us some context on that.
So the United States total economy, GDP, how you define GDP is every dollar spent during the year. So that's consumption,
Right.
right? Consumers buy and sell goods. It's government spending, and it's investment.
Trade.
It's investment. Those three, and then it's exports and imports.
Yeah.
Right? So it's C plus I plus G plus exports and imports. That's what GDP is. And currently in the United States, it's about $28 trillion a year.
So $28 trillion a year, gross domestic product is all the money spent back and forth in the United States in a year.
So we owe more money than the money we actually spend every year.
Per year. Right now, we're at about 125% debt to GDP. When countries get that indebted, well, the last 34 countries that got that indebted, 33 of them had to restructure their debt. That's mean they had to go to their bankers and say, oh, we're really sorry, but can you cut my debt? Can you extend my debt? The problem is the United States is the reserve currency. We are the banker.
Right.
And so when a reserve currency, right, when the banker is under duress, it really gets ugly. Yeah. And so what should happen? What should happen is you tighten the belt. The government needs to cut spending dramatically. Yeah. The government probably needs to raise taxes on the wealthy, some. Can't raise them a lot because at that we already have pretty high taxes. They got to raise some. So you need to raise taxes and cut spending. And you got to hope that growth kicks you back up and you start growing fast enough that you pay off some of the debt. The problem is we've got politicians on both the left and the right that love spending money.
Yeah. I would say, I think one thing that's confusing for people is you feel like the government, well, you can just print money, right? So I think it's important to equate it, the government's just like a big corporation, effectively, right? They have to either make money by taxes, spend money in terms of programs, borrow money, right, which is issuance of treasury bills. But there's one more thing the government can do, which is effectively print money, right? Yeah. They can add to the money supply, and that's really one of the key things in terms of driving inflation. Right. So, describe that a little, because I think it's even hard to understand the concept that a government has to actually have more tax revenues in than it spends. It's obvious, but I think it gets mixed up in the media.
So state governments and federal governments have to balance their budgets. Right, and if they don't, they've got to borrow money, and they borrow at a pretty high rate.
Local and state.
Local and state governments, like city government or state governments. Yeah. The federal government can actually print the dollars. So, hey, I owe you a bunch of dollars. I'll just make some new dollars and give them to you.
And so what's the effect of that?
So if you do that too often, people are like, well, this currency is no better than toilet paper. And so what's been happening recently, first after the 2008 financial crisis, and then really during COVID, the government is just printing more and more money. Mm-hmm. In crypto, they said the printing presses go burr, right? And so we've increased money supply to such a degree that our money isn't worth as much. And it's not worth as much against Bitcoin. It's not worth as much against real estate. It's not worth as much against stocks. That's why the stock market goes higher.
Yeah.
It's not worth as much against silver and gold.
Right.
And so if you keep printing money incessantly, you look like you become Venezuela or now Nigeria. Countries all around the world are printing too much money and their currencies become worthless, which then eats into the purchasing power, i.e. your spending power of working class, middle class, everybody.
Yeah. So is it accurate just to say that another way of looking at gold going up in the last few months, right? Gold's at historic highs. Bitcoin
You heard it first on Business Untitled.
That's right. You did.
What is gold now?
2250.
2280.
What was it when we started?
1850, 1900.
Yeah. So gold's gone up probably 15% since we've been giving these gold coins out and talking about it. But would it be accurate to say, you could look at that? We all look at it as the price of gold went up, the price of real estate went up, the price of oil went up. But another way to look at that, particularly with gold, right, for instance, is that the price of dollars went down.
Yes.
Right.
That's actually the right way to look at it. Now, traditionally, we've looked at everything in dollars because dollars are the reserve currency. When
What does that mean?
The reserve currency is the currency that most trade in the world is done in. And traditionally, it has been the currency of the country that controls the seaways, right? So before us, it was Britain, the UK. And if you control the seas, you often become the reserve currency because you're protecting trade and you're protecting shipping. And, it's a huge benefit because you can borrow much cheaper. It's a cost, right?
Yeah.
The cost is you have to have a big, strong Navy and Army,
Yeah.
right? We used to spend 5% of GDP. 5% of total spending used to happen just on the military.
Yeah,
Now
yeah.
that's about 3.5%.
Yeah.
But still, we spend a huge amount on our military.
Right.
But if you lose that privilege, then it costs you a lot more to fund your currency.
Right, and essentially, just I
fund
know
your
you
debt, I'm
you
sorry.
you use the term reserve currency, but what that's coming from is that central banks reserve U.S. dollars against their own currencies, right? And the effect of all the trade in the world virtually being done in dollars. So if Saudi Arabia is selling oil to,
China.
Japan or China or something, most of that is priced in dollars, even though we have nothing to do with it. And so if you want to make sure that the appreciation or depreciation of your currency is not affecting your ability to buy and sell resources, you need to stock dollars in your treasury. The only way you can stock dollars is you gotta buy them, you gotta bid for them, and so that's what he's saying when it keeps the price of interest low because a lot of people are bidding for the treasury bonds.
I've been to almost 100
Right.
countries, and every time you go there, you meet some rich guy. How rich are you? He doesn't say, "Well, I'm worth this many Nigerian, whatever their currency is, the naira,
Yeah.
or Philippine pesos," or they tell you in dollars.
Yep.
People think of their wealth in dollars. That is starting to shift, right?
To what?
Well, in Europe, the euro is stable enough that people in Europe think of their wealth in euros. The people in the Bitcoin community often think of their wealth in how many Bitcoins they have. So if you look at Bitcoin, they don't say, "Oh, my Bitcoin is worth X in dollars." They're like, "How many coins do I have?" And it's a small community. It's a vibrant community, and it's like almost a religious community. But that was the mindset
Right.
that as paper money, as fiat money, or as government money becomes less trustworthy, that you need something else. That was the whole idea of Bitcoin, and it's starting to work.
Yeah, and it's the whole idea of gold at the
And
end
the
of
whole
the day.
idea of gold. And quite frankly, it's the same thing as real estate. Real estate's a lot less transportable. I can't pick up and sell my apartment to buy my groceries. I can borrow against it, but money needs to be divisible, transportable, exchangeable. And so, again, I go to bed and I say prayers every night that our government gets its shit together, that we don't go into a fiscal crisis, even though that would mean the price of Bitcoin would go lower. Yeah, I own a lot of Bitcoin.
Oh, wait, if there's inflation, it's going to go higher, though.
If government did its job,
Oh,
if
I
they
see.
beat inflation down,
Yeah.
if they balanced the budget, or at least put us on a track to balance the budget, if we had prudent fiscal spending here and around the world, you wouldn't need Bitcoin as an inflation hedge, as a debasement hedge.
Right.
The problem is there's nothing I see with Donald Trump or Joe Biden, or in almost any country, other than places that got so bad, like Argentina, it got so bad that they got a president who said, "Enough's enough. We're going to go to a gold standard, a dollar standard, a Bitcoin standard."
So I guess my question is bring us back to the same thing. Are we done for? Like,
We
if
might
you
be.
don't see, what does that mean? We might be.
That's a little bit too simplistic that we might be, right? Like I'm saying, there's a few moves that can be made.
Like what could be
What's
done?
a move that can be made? They can, well, number one, they can cut spending a bit and raise taxes a bit or some combination to actually balance the budget like you would do if you had like a bunch of credit card debt. You'd like work at overtime or you'd stop spending so much, right? So there's that. Okay. Secondly, they can take some of these things that are entitlements, something like Social Security, and they can, for younger people, start to change the age at which Social Security kicks in. And so therefore that makes the liability smaller.
Right. So
Go on.
just to go to Social Security. So we talked about $34 trillion in debt, growing at $1 trillion every 100 days. That's the federal debt. You also have two other giant worries. One is we have Social Security system, which is you work, you pay 6.25%, 6 point something percent. The government saves that, invests it in treasury bills, and when you become 62 or 65, depending, you get your money back.
Yeah.
And that was supposed to be funded, but people started living longer, and a lot longer. And now that like you had inflation, my parents got a big jump in their Social Security checks.
Right.
And that, I think it's got $3 trillion left. It pays out about $1.4 trillion a year. That's 5% of GDP. Just the government giving our elders 5% of GDP a year that they had paid for. If you're a young kid, you're like, oh, the money won't be there when I'm around. Right now, projection is by 2032, which is only 8 years away, there's nothing left in the Social Security Trust Fund. And so Dave's right. You can change that by saying, hey, you can't retire at 62 or even 65. You got to retire at 70 or 67. And it doesn't take a lot of years
It doesn't.
to change. Or you can say, you know, I know you paid in, but tough freaking luck if you're rich, you don't get it.
Yeah.
That's one of the things I was going to say, right? I think part of the solution, but how do you get them to okay that, is if you're 65 or your retirement age and you're just worth $1 million or whatever it takes you, whatever Social Security would contribute to your life, let's say times that by 2 to the rest of your lifespan, should just be a law that you should not be able to get that Social Security. How much would that change things?
I don't think it changed it that much.
Yeah,
to be
and,
honest,
and
because
people feel like, wait a minute, this was my money. It wasn't your money. It was my money that I paid in. It was like, it was you forced me to save my money. I took my money and I put it in a piggy bank that you monitored, my piggy bank, and now you're stealing my goddamn piggy bank.
No, but just to be American and stop the country from ending. We're talking about doomsday scenarios, right? We're talking about what we need to do in order to survive. So at that point, it's like, who cares how upset you are? We're trying to live as a country, right?
I was also going to say that, you know, if you're just taking that portion of the population, it's going to be a couple of percent of people.
That's the next thing. It's like 1% of people, right?
It's not a lot of people. The much more effective thing would be to say, hey, everybody that's under 40, instead of retiring at 62, it's now 64, right? And if you're under 30, it's 65, right?
What do you think that saves?
It's trillions, because he's saying that they're spending $1.5 trillion a year on it, right?
We spend $1.4 trillion a year.
Okay, so at a minimum, it's saving $1.4 trillion a year for that. Well,
no.
It's once you take everybody's
once everyone's there.
Once everybody's there.
What's interesting is this has been called the third rail of politics.
Yeah.
You can't touch it. The moment you start talking about it, both sides attack you. And so why we've never changed it, it's changeable. Just you could say people haven't been born yet. We're going to make it, 70.
Yeah. That would help.
When they came up with the Social Security law, life expectancy in the United States was 59 years old. You were supposed to be dead by the time you get your Social Security, right?
And what happens to it if you die?
What?
You
lose it.
You lose it.
It's only for when you're alive. Yeah.
Wow.
But like somebody like in France, but when Macron is coming to his last term, he actually took on that third rail in France. It caused a lot of protests, but he doesn't have another term, so he basically bit the bullet and did it for France, and he pushed that
Tiny,
like a year or two.
And they were like 6. I think they're the lowest retirement age.
Yeah.
And he pushed it. It's still below the rest of Europe. And man, oh man, they shut the country down almost.
Yeah.
People really feel strongly about the issue.
Yeah.
And the other is Medicare, right? We pay for, people's health care, and that's underfunded by a giant amount. So when you add Social Security and Medicare, and you say, okay, if I go out 25, 30, 40 years, what's the underfunded liability? It's double our debt. So now you're like 34 trillion and another 60 trillion. Oh my God, we're 100 trillion. You can literally lose your shit.
So wait, okay. Stupid question, but simple, right? How does a place like Canada that does not have enough money, not enough money, does not have the same amount of money we have or GDP that we have, how are they able to give free Medicaid to everyone?
Yeah, that's a whole. We could do four episodes on
No,
that.
I'm
But
curious.
if you have single payer health care, you get what the state says you're going to get. Now, my dad just got rushed to the emergency room because he had a problem, and in Canada, maybe they'd say, hey, we're not going to fix that. In the U.S., you can pay to get fixed insurance. We want the best health care for everybody, and we don't put limitations on people.
Yeah.
You might, to get a hip replacement, have to wait 18 months.
Oh, so Canada does have those limitations, which you
Yeah.
could actually do.
No,
I didn't know
but
that.
listen, because it's single payer, it's much more efficient in lots of ways as well. And so there's benefits and there's costs to it. America is a country that's born on freedom and born on, I want to do what I want to do. Don't tell me what to do. Right? Canada is a center-left country.
Yeah.
We are a center-right country.
Yeah. It's also got the pharma industrial complex, the industrial. So there's a lot of money that goes in protecting that system effectively. I was going to say, just switching off of Social Security, right? And then I think we should talk about, well, if inflation's going to be here, what opportunities does that create? But another possibility, because you asked the doomsday scenario, is they could require banks to hold 3% treasury bills if they wanted to, right? I'm just saying, if they made a law and said all banks now have to hold a certain percentage of their deposits in treasuries, that's effectively, the big money center banks a little bit, but mostly it's shorter term paper things. But I'm saying, if you made it, there's no requirement for regional banks right now. It's like after COVID, they released them. But I'm just saying, if you were, let's say you made it bigger, 10%, I'm just making a number up, you're effectively like forcing the banks to take the money that's being deposited with them and invest it in the public sector. That's
what's
effect.
already happening. So
it is, but it could happen more.
Our biggest bank is the Federal Reserve. And so the way we're borrowing so much money is the Federal Reserve is buying, they've bought more debt than anybody. Right, and so this is what's called like monetizing your debt. Why we have inflation.
But what I'm talking about is socializing it.
Well, you've done that.
But if you think about, I'm just saying, like, if
that is socializing it. When the Federal Reserve,
that's inflating it. It is socializing it in a different way. But you could also by requiring banks to hold treasuries at some level, right? You could effectively channel.
Banks are required to hold treasuries already at a fairly high level.
Higher level.
But it's the same. Like if it's J.P. Morgan or the Fed, it's the same thing. We're printing money that somebody's holding, right? The banks get their leverage from the Fed.
Yeah.
It's a really interesting problem. Listen, it works to a degree. It works wonderfully if people trust you're not going to go off the deep end. And so here's a number that drives me crazy. I worked at the White House in 1983.
What, you did?
I did. I was in 1984. The summer of 1984, I was in the Office of Management and Budget in the old executive office building, and I learned that the federal government, for years, Republican or Democrat, got to spend about 20% of GDP of the total on government. That's the target, and we would try to tax 20%. And when we did, that's a balanced budget. It only happened in my lifetime in 1999 with Bill Clinton. He balanced the budget for 1 year.
Yeah.
All the rest of the time, we ran deficits. But they were small deficits. And when they would get to 5%, it was because something bad had happened, and that was a real crisis. Yeah. Today, in a really strong economy, right, with low unemployment, with big consumption, with things that are feeling pretty good, we're running a 6.5% budget deficit. Yeah.
Wow.
This is populism.
Yeah. So let me stop you there too, just to clarify that deficit is the gap in what you're spending per year, right? Versus the debt is like your whole thing, right? So that's the difference between those numbers. Is effectively
right. So you're adding to the debt, not just by the interest payment, but by, hey, I made $100 this month and I spent $400. I just added $300 to the debt.
Right. Yeah.
And we're doing, if you think 6.5% of 28 trillion. Right, it's another $1.5 trillion we're adding to the debt on top of the debt we already had.
So we have a structural problem effectively, which is that we're not controlling our spending, right, and our taxes, which is creating this like permanent inflationary situation, right? And what I wanted to jump to is, who does that help? How do we take advantage of that, right?
Yeah.
Real estate, gold, Bitcoin, stocks. Like, where do you look at that? What's bad in inflation? What's good in inflation?
Well, so it's so interesting. There are two types of inflation, right? The inflation that drives food prices and labor up, right? What we see, consumer price inflation, they call it the CPI, right? In lots of ways, that hurts most people because they've got an income and now they're spending a lot more. But if you've got a lot of debt, it helps you. If I borrowed $500,000 on my house and I have 3 years in a row of 10% inflation and I have a 4% mortgage, doing pretty well.
So you have a fixed rate mortgage.
Right.
If you have a floating rate mortgage,
you're screwed.
That's a bigger problem,
Yes.
right? So in a fixed rate mortgage or loan, when there's inflation, if you're holding assets, particularly assets that are leveraged, it helps you dramatically. And in fact, it's probably a big reason why since 08, since 07, 08, and since COVID even more, that there's this pull away of assets, the rich and the poor, and basically like asset inflation versus wages.
The second inflation is asset inflation. And so when they originally put rates low and put lots of money in, if there's more money on the island and there are only 4 bottles of water on the island, if there's only 8 rocks to buy the 4 bottles, we know how much the bottles can cost. But if there's an infinite amount of rocks, I'm like, 4 rocks, I'll give you 400 rocks, right? You can drive the price of the asset up. So when they put lots more money in, it drove the price of the asset up. Well, guess who owned the assets? Rich people.
So here's a question for you, Dave.
Yeah.
If you are a poor person who had a floating rate or have one right now, and there's inflation, is that an asset you hold on to or an asset you get rid of?
You're saying real estate?
Yeah.
I mean,
Do
I
you
think
wait?
you hold on to it. No, I think you hold on to it
No,
because
the mortgage.
wait, you're talking the mortgage or the
Yeah.
asset?
The asset. If
The asset's not a floating rate.
No, I'm saying that the mortgage of the
It's
asset
floating.
is floating, right? You don't have a fixed rate.
Right.
A lot of poor people don't have fixed rates because they couldn't get it, right? Do they hold on to it in hopes that it go back down, or is it just bringing them down more?
No, I think you hold the debt. You keep the debt. You tough through it, right? Eventually, because the asset's going to inflate at the same time. So
Yeah.
if you can't hold it, you can't hold it. But if you can and you can make that payment, you're basically attached to the house or the property itself, which is like coming up with inflation, right?
But what you're seeing right now
Yeah.
is in lower income groups. So COVID helped a lot for a while. The government gave a lot of money.
That they printed.
But people
borrowed.
people couldn't go out, so they paid down debt, right? So savings in the country went up, debt in the country went down. And so people paid off their credit card debt. They paid off a lot of debt with this free money from the government. So that was smart. And then they went back outside and started spending. And the government's free money went away to them, right? No more relief checks and big unemployment benefits. And now interest rates are going up and people's credit card debt is going like this.
Yeah.
And so you see credit card debt going way up, and credit card's expensive as heck.
Yeah.
And so
But where did that
wait,
free money
wait,
come
wait.
from initially?
we just printed it.
That's what
basically-
added to the $34 trillion we
Yes.
owe,
It
right?
was
So
before
how did that help?
It was a sugar
before
high.
30. It was actually before 34. It was
No,
like
I'm saying, of course it was before,
Yeah.
but it added to it.
Yeah.
So how did
made
that
it.
help
It
initially?
was a big sugar high.
it did not help.
So it didn't help.
No,
Well, it helped in that short period of
No,
time.
but it
helped
didn't help
wonderfully.
at all.
it created the inflation.
Well, it did and it did, and it got our economy back roaring, right? It got people back to work.
Yeah, but it was fake.
It was a sugar high. Agreed.
Yeah, so it didn't help.
Yeah, I think in history,
It's hard to understand what the counterfactual would have been.
Yeah.
Right? The counterfactual would have been if we didn't give people any money, if we didn't help people out, you'd have had a much bigger unemployment problem. And could you have jump-started the economy quick enough? I don't know. It's just it's easy to say I know. Like you don't really know the counterfactual.
the counterfactual would have been not having lockdowns for as long as they had. That would have been the
agree with that.
counterfactual. I mean, basically, like certain states locked down certain countries locked down for years. The United States was a little bit better than that, but effectively they put all that money into the system, but there was no productive outcome, right? So if you're borrowing money for something to build a business, to build a restaurant, to get a piece of property, you're taking that money, you're borrowing it, you're putting it into a productive asset, right? It's something that has a utility. In this case, that really didn't put it back into productive assets. It effectively went in people's bank accounts. Yes, it helped the savings rate for a while, but then it just got respent back into the consumer economy, and that's what's caused this inflation.
You want to hear a crazy stat about lockdowns?
Yeah.
I just got this today. It's a little bit of a non sequitur. Before lockdowns, absences from schools, roughly 14%.
Yeah.
13, 14,
Yep.
13, 14 in the 5 years going.
Yep.
Post-lockdowns, people think
Guess.
school's optional. Absences, guess. It used to be 14%. What do you think it is now?
40%, just because you're so
28%.
passionate about it.
27, 28%.
Boom.
That's
Boom.
crazy.
Dave Barry gets a freaking gold star. We literally doubled. What the hell happened? It became optional. I'll go to school if I want to go to school.
Yeah.
We haven't recovered from the inanity of the lockdowns. We haven't recovered in school. Kids have lost 2 years, even in work. Right? Some guys have gone back full time. Some haven't. There's this almost assumption that you can work from home.
Yeah. So let's talk though about, like, we're looking at inflation. I mean, the Fed's, right, they're combating it, they're hitting it, but at the end of the day, this structural deficit, this structural debt, creates an environment where inflation is something that has to be managed, right?
Yes.
And in fact, the only way for the Fed, or the government, I should say, I shouldn't keep saying the Fed, to get out of this mess is partially by continuing the inflation while they start to rein in, spending and taxation. If you were to take the opposite of that, for instance, which would be deflationary, it would be an absolute disaster, right?
Yeah.
So I'm saying it's a systematic inflation. So where do you invest in that? I understand you could go on this a long time, but I think it's like
So you want to be in hard assets. So what are hard assets? Real estate is a great way to invest, right? You should have real estate. You should have gold and silver. The gold chart is breaking out. The silver chart is breaking out. I still like Bitcoin. It's had an amazing run. It's having a correction now. It will probably consolidate for a while, but I still like Bitcoin as the new generation's hard asset. But also stocks. Stocks are hard assets.
all stocks.
No, I mean, but stocks in general.
But what kind of stocks?
Well, right now the whole market's been driven by AI. I think it's more risky to buy the most high flyers, but just having money in the equity market, right?
Like diversified.
A diversified bet, because if you're printing money, it pushes asset prices up.
Right.
And so stocks are hard assets.
Right. Well,
right?
in a sense, though, even if you look at the underlying aspect of stocks, like commodity stocks for sure, right?
Yes.
So if you have something that's anchored to commodities, right, whether it's like farm, chicken prices or minerals or oil or
Here's
things
a great tip for the more sophisticated business Untitled. Buy the Korean stock market, right?
Yeah.
Korea. Well, Japan was the darling last year because Japan, got inflation for the first time. The economy was heating up. B, they had a mindset shift to say we for years had these companies that were way traded way under book, and they said we're going to make all these companies have to.
What's
trade
book?
under book? Book value is if I took the company, shut it down, and sold all the asset. What's it worth?
Okay.
Right. What's the equity value of the company?
Yeah. Talk about the difference for 1 second about book versus value. So that's the value of book.
Book would be a combination of the cash they hold, the assets at fair value that they hold. Right. So that value is, have you created a money-making machine that goes on?
Right.
And so in a company like NVIDIA, they're not making that much money relative to the market cap because people think next year they're going to make so much more, and the following year they're going to make so much more, and the following year they're going to make so much more.
It's usually the case with technology, right?
Well, growth stocks.
Yeah.
Growth stocks are stocks that we believe in the future will make a fortune.
Yeah. I was going to say, and go back to your point, but the difference between book and valuation effectively is one is if you took all the assets of the company, as you said, and sold them, you're cashing that, whatever you have, and you're not going anymore. It's just like you sold all your shit. And otherwise, they're really looking at your future cash flows, right?
Yes.
And they're putting a multiple on that based on growth. So that's the difference between book and
so if you're
effectively valuation.
If you're a conservative investor, you're looking at low price to book. And if you're a growth investor, you're looking at stories, at companies that you think will make lots of money in the future.
So go back to Korea.
Listen, Korean stocks are cheap. They've, just like Japan, they've consistently traded way below book. They saw the mindset shift in Japan. You're seeing it happen in Korea. But they also have a few of the best companies that are going to benefit in AI. Samsung, Hynix, I think it's called. And so, right, they're part of the architecture of this whole new, chip revolution that NVIDIA is in the forefront of. And so you get a little bit of a tech AI play, you get a regional play, and you get a Chase Japan play, and the chart looks great. And so
Interesting.
there's my macro call of the day.
I like it.
All right. Now, let's get to the people.
The people's choice.
The people.
People got some questions. You should know who you are if you ask this question. But how do you create wealth in your 30s and 40s? Dave.
Work.
Well, yeah, work hard. That's for one thing. But I think you need to find a way to get into the asset system. You need to find a way to borrow some money potentially, but basically get yourself where you're owning some assets. That assets could be a restaurant, it could be stocks, it could be real estate, it can be Bitcoin.
It can be a small company.
It can be a small company. It can be a lot of things. But what this is telling us that just wage earning, even if it's high paid wage earning, if you're not in the game and you're just putting your money in, money markets and short term bonds,
you need equity.
But wait, I
What
was just
you're
about to
saying
say
is
that,
you need
right?
equity.
you need
Wait,
equity.
So
Yeah,
from
but
my community, when you have no equity, no one would give you a loan because your credit is fucked up, right? Which is most people. How do you even do that? Like,
It's
how
hard.
do you even start?
Small business loans.
You don't have any money to get a small business. I mean, it's hard for you to get small business
FHA loans
loans.
to buy you only have to pay 4% down to buy a house if you get an FHA loan.
Don't have the 4%.
Well,
Then
then,
it gets-
then again, you can't get nothing for nothing.
Yeah,
You
it
got-
gets,
That's what I'm
well, let me
saying.
say this.
You got to get a grub stake, and that grub stake comes from hard work. It's hard work and saving. It is hard. I'm not saying it's easy.
No, I know
I just
you're
can't wave a magic wand and make you rich.
Yeah, since he asked the question to me, let me also say that. No, I'll also say that sweat equity, right? Like, in other words, you can do something where you have a really good idea, you bring it to somebody, whether it's look, restaurants work like this all the time. Some chef with no money comes in to a couple of people he knows and says, I have a great idea, great spot. I want 20% of the business or 30% of the business. I'll do all the work. You guys put up all the money, and that gets you in the game. So even with real estate, that works where, you want to buy a building or somebody wants to buy a building, they get the contract. And hey, there's hard work in this, but effectively it's always a little bit of a circular game of like, I have an idea, I have a property, I have a business plan, and then you go find money. And so I would never discourage anybody from trying to find money just because they don't have any money at that point in time. That's the beauty of this country, is that there is money around. If you have a good idea and a dream and an execution plan, you can get money often for that.
I agree.
Yeah.
I did it.
So
Mike, what's your answer to that question?
I mean, I think it's the same thing. You've got to find equity. You've got to have upside to some enterprise. You can do that by investing. You can do it by working for a company where you get some shares. You can do it by starting a company.
Yeah.
But if you don't own equity, you're never going to gain wealth. Yeah. Listen, unless you've got some God-given talent, you're the best violinist, you're the best basketball player. Okay,
and
that's equity in yourself.
And even equity, right? When you take public markets, you take tech companies, you take real estate companies, equity gets given to employees for their sweat as well. It doesn't always have to be entrepreneurial. It can, but you can also get equity as part of a company, right? Just sort
every
for
Galaxy employee has got equity.
That's right. So sort for it in your mind. If you're looking at two companies and one's got an equity participation and another doesn't, maybe something that you consider, right?
Okay, question for Mike. What's the difference between your 20s, 30s, and 40s when coming to business? Or what you think, what's your opinion on what the difference should be?
And don't talk about hair.
Yeah, good point. I had great hair in my 20s. Listen, your 20s, you're there to learn. Get a job at a place where you're learning. You're being curious, you're working hard, you're learning, you're asking questions nonstop. 30s is your place where you've taken that skill and you're starting to make money, right? And you might start your first company, you might still be working for someone, but now you have some domain expertise, right? Your 20s is about developing a domain expertise. Get good at something. You're good at music, get good at real estate, get good at finance. And then in your 40s, that's like almost your strongest period. It's not the leadership. 50s is leadership, but it's where you're building your baby. And so again, they're not perfect chapters. Some people do it. Mark Zuckerberg built one of the great companies in the world when he was freaking 20. But mostly, I'd say 20s to learn, 30s to make some money, 40s to build something, and 50s to be a leader.
And by the way, don't give up.
Good answer.
Don't give up, because Morris Chang, right, who's like Taiwan Semiconductor, probably one of the most valuable companies in the world, didn't start his company until he was 55.
Yeah.
You know that, right? Yeah. So he basically controls the semiconductor industry. Effectively, he's the best guy in there. And he started at 55. I mean, that's unusual, but it shows like just keep going.
Another question. Does AI hurt or help poor people?
That's a great question. I actually think it's going to make it more and more difficult for the world to get more and more flat. We've had a world since Dave and I graduated from college that has gone one direction when it comes from the gap between rich and poor, right? The Gini coefficient, they call it, at least in the United States, has gone like this. And labor's share of income has gone down, capitalist share has gone up. I don't see AI changing that in a good way. The counter argument to that would be, we're going to have these phones that can be your personal tutor, your personal, and the productivity gain from AI is going to be so high that maybe the chance of kids in bad neighborhoods having great teachers because it's an AI teacher, changes their trajectory. But my son always says, Dad, Kinshasa, Zaire has 8 million people that don't have electricity. How in the F are they going to get AI? We have such infrastructure problems in our poorest neighborhoods. It's one of the problems in COVID. We couldn't get computers to kids in bad neighborhoods, or they'd get computers and they couldn't recharge them. Or
I think it's a
What's
bigger
your answer to that?
I think it's a bigger issue. I think AI is dangerous for everybody, if I had to say. So, yeah, poor people for sure, because we could talk about a lot of different systematic things that basically affect the poor in an outsized way to somebody with money, right? That's part of probably embedded and endemic to capitalism on some level, but and some of the things we talked about earlier about inflation and money supply is exacerbating that. But I think it's a bigger question, like how is AI going to treat humanity? Not just because some monster is going to take it over, but it's just going to eliminate a lot of jobs. It's going to it's going to hurt architects. It's going to hurt a lot of doctors. It's going to hurt lawyers. It's certainly going to hurt.
It's happening so
manual
fast.
people. Yeah,
it's happening so fast.
How's our interruption jar going?
Yeah.
You know what? We need
Pretty
to
good.
switch
Pretty good.
to the interruption jar. No, but one of the scariest things I heard with AI was Sam Altman. He said there will be a future where entire billion-dollar companies are run by one man. And that may sound cool as fuck if you're Sam Altman, right? But if you're one of those 400 employees that could possibly work at Galaxy, and now Galaxy could be ran by just Mike, what happens to those 400 people?
Yeah, it's a big question.
Well, the other thing that I was thinking about this weekend is, we sit in the middle of New York and in finance and, connected to a lot of tech people. If you drew a circle and figured out who's really part of the conversation, who's shaping things, who's investing in them, it's a small part of the world. I don't know if it's 50,000 or 10,000, but it ain't a million people that have access. I mean, I met a kid just before we came in here. I said, tell me about yourself. He said, well, I was the world champion in math. I was like, I love math world champions. And apparently there were two kinds of math world champions, one where you have no computer and one where you can bring a computer. Learn that today. But he's starting an AI hardware company. And, it's only been going for a couple of years. His fundraise is wildly oversubscribed because everybody
wants AI.
Everybody wants AI.
Yeah.
And so you have to actually beg to give the guy money.
Yeah.
Wow.
It's a bit of a bubble right now, to be fair.
I feel like it is a bit of a bubble,
yeah,
too.
from an investment standpoint. I'm saying it's real, right? It's going to happen, but there's so much hype in it right now. You got to be careful. You got to
be careful with but you also you got to have some chips on the table because a few of these things are going to work and they're going to be the most valuable companies in the world. Mm-hmm. And it's hard to get access to them. They're not public stocks that are easy to get access to, and those ones are very, very expensive. And so the private deals are really hard to get access to. And so in lots of ways, it's going to we were talking about Perplexity AI, which is the app I use. The two biggest owners are Bezos and Jensen, from NVIDIA. And so you're going to just see even more concentration of wealth as this AI thing works out.
It also says, like, when you talked about whether it's 10,000 people, 100,000 people that influence the world, even being in New York City is an advantage. Even being in San Francisco or
being
Austin,
in New York City is an advantage.
Yeah,
Say that
it
again.
is. Being in New York City is an advantage, right? There's smart people here. There's people that are doing all kinds of things. There's a concentration of brain power and real capital here. So, there's no question about it. If you're living outside of Mobile, Alabama, an hour outside of Mobile, you're not going to have the same access to capital, to intellectual capital or ideas.
What's crazy is San Francisco is going to have its renaissance. As crappy as that place got and as bad of a reputation as it got and poop on the streets and, all the shit you read about, all the AI companies, all of them are out there. They're all Silicon Valley companies again. And so you're seeing it already. I have these two guys, where do you live? Cupertino, right, where Apple is.
Maybe around San Francisco.
Yeah, not San Francisco, but that whole area, Bay Area,
Yeah.
it's going to go through yet another boom.
Wow. Yeah, well, there's a ton of intellectual capital out there, right?
Yeah.
You got Stanford, you got Berkeley, you just got all these companies. So that's a huge deal. Like if you're trying to start out, we talked about Dubai on one of these shows, but if you're trying to start out, you got to get to a place where there's money, there's people, there's ideas, right? You just can't be like in the middle of nowhere. Really, it's gonna put you at a disadvantage.
Next question, Mel.
Looking for a good one. Where do you think Bitcoin go? And if you have just a small amount of money, would you say to put it into Bitcoin?
Listen, I wouldn't put all your eggs in one basket, no matter how much money you have. And so I put some money in Bitcoin. Listen, I have a lot of my own money in Bitcoin, so I practice what I preach. I do think it's going to go higher by the end of the year, that it could get to 100,000. And I think there is a possibility, not my base case, but a possibility that it goes much higher. Mm-hmm. I started this episode, Dave's first question. There's something that feels different to me as an investor in the last 4 to 6 weeks, that this idea that we're moving into this debt crisis is percolating all over the place. And if that actually jumps the tank, if that really becomes a fire, then gold could be at 3,000 faster than you think.
Right.
Bitcoin could be much higher than you think.
Right.
If people really worry that we lose control, I don't think that will happen. Like the one wonderful thing about America, and it gives me lots of confidence, our civil servants are smart. The people that work, and they're not political, the people that work at the Federal Reserve, the people that work at Treasury, the people that work in the guts of our government are patriots. They are smart. They know what to do. They don't always have the political backing to do it. They don't always have the courage to do it, but they know what to do.
Yeah.
And so I don't think we're going to turn into what you used to call the Banana Republic. I'm sure I'm going to get canceled for that. I don't. We are very well managed.
Well, we're a long way off from that. I mean,
but the government keeps screwing up.
So it's really
we got politics that just seem unbearable.
You should run for president.
So it's really about confidence in the future. I mean, there's a long runway on this. I don't mean it's super long. Like we got it. Like the longer. The longer we wait, the less likely it is we're going to actually solve this. And that's what's starting to dawn on people right now is like, this is an unsustainable rate.
Right.
And in a sense, like there's got to be some motion towards solving this.
Three
at the
of the
level.
guys who have been the most successful in finance ever.
Yeah.
Ken Griffin from Citadel, Stan Druckenmiller, Duquesne, Paul Tudor Jones from his group, the Jones Group, all in the last 2 months have either written big letters to their investors. Ken Griffin doesn't normally write a letter to investors, apparently, and he wrote one about this crisis, that we're in a fiscal crisis. And so these are some of the richest, but forget richest, they're the smartest investors literally that walk the planet, and they're all ringing the alarm bell at the same time. And so if you're not listening, you're a fool, right? And that's
What's going on?
That's this idea of we need to change something in D.C. Listen, Kevin McCarthy, who was the Speaker of the House who got thrown out, he was speaking truth to power when he was trying to shut the government down to say we've got to balance the budget. And of course, he got thrown out. They didn't. And so maybe someone wakes up, but in an election year, it's hard.
Right.
All right. We'll take a couple more questions. This is an interesting comment. Some lady said Mike was the best looking guy at Goldman. No, that was bullshit. This question's for Dave. How to break into real estate coming out of college? As a young man coming, for women too, I should say, coming out of college.
I think there's no easy answer to that, right? I think you need to get near the capital and near the action, near the investment part of it. So real estate's a big industry. A lot of people say, I'm in real estate, right? Sometimes that's brokerage, sometimes it's marketing, sometimes it's lending, right? Okay, you could be at a bank loaning money but you're not in real estate, you know? I think you need to get close to the source of that, right? That means purchasing somewhere in the investment cycle of that, whether it's developing or purchasing, working for another company, working for yourself. But I think getting some training, and it's not super easy. There's a lot of places you can attack it. There's REITs. There's a lot of mama papa shops in real estate because it's such a diversified industry. So people ask me that a lot, and I don't really have a blueprint. I think it's a lot of hustle. You got to get out there. But I think brokerage, isn't quite the same thing. I'm not shitting on it. There's some interesting things with investment brokerage and some of the more sophisticated pieces of it in terms of deal structuring. But
so if you ask me that same question about music, there's only two ways. It's finding an artist, managing him, putting some capital behind him, or intern, which is 90% of the music industry started as an intern. Every CEO was an intern. So that would be my answer for music because they just asked that too. Mike, how do you break into finance?
It's hard.
As a young kid.
You knock on doors, you put your resume out there, you beg, plead, and network the best you can. The hardest job you get is your first job.
Is internships a big thing as well in finance?
They used to be, but now it's a weird system. The internship is almost like getting a job. And so they're so hard to get. They usually come from a certain group of colleges. There are pockets for, kids from HBCUs and from other backgrounds. Normally, getting an internship gets you a job, but it's almost like getting a job. And so, just the classic internship that your friend's dad gets you, those things have gone the way of the dodo bird. And so. It's hard. You really got to scramble.
Yeah, and I'd also say you got to keep yourself if Mike said it before, but if you're in your 20s, you want to be learning, right? And so if you're not learning somewhere, and you got to hustle, get in the door. But if it's not the right place, then move on. I'm not saying right away, but you really need to keep your mind on, and you should be taking all the work you can when you're at those places. When you're in your 20s, you are there to learn on somebody else's dime. And when I see this mentality sometimes, which is I'm saying work-life balance or you shouldn't be thinking that in your 20s. You should not be thinking that if you want to get here.
The other thing I would say is, a lot of kids come in for interviews and I said, well, why do you want to work here? I really want to be a trader. I said, well, tell me what's the best trading book you ever read? Oh, they hadn't read a book. And I want to say, you son of a bitch! I'm sitting down with you. I'm doing a favor for somebody to sit down with you. You're telling me you want to be a trader, and you've never even read one trading book. Do your stinking homework before you show up for an interview. Know the company, know the industry. You don't have to be an expert in it, but spend 15 hours getting yourself ready. Not 3 hours, 15 hours. That means read a couple books, understand what you're doing. Why would you want to be a trader?
Yeah. How you prepare for a podcast.
Yeah. I had 32 years of preparation for this podcast. But it's so interesting because most people don't. There's a laissez-fairness. And how you decide what you want to do in life is work at it. Hey, I want to be in the music business because it sounds cool. Now figure out what the music business actually is. Yeah. Then you come in and the person's impressed with you.
Good advice.
You got to impress people to get a job.
Good advice. So I'm going to take two more questions. I have a special guest in this room, my friend Lex, who is a very young lawyer that I watched become a lawyer. When did you pass the bar? a year and a half ago. He's been working with me and my lawyer, Hector, for a while, and he's been a day one fan of the show. Yeah, I want a question for Mike, and we want a question for Dave. No question for me. You asked me enough already.
Individual book that you think would give the most value to somebody in their 20s?
You go
Dave
first.
got the answer for that, I'm sure.
Individual book. Okay, yeah. I would say that's and I assume this is relating to business. That's how I'm going to address this. I think No Rules Rules, which was written by Reed Hastings, right? That's a Netflix guy, right?
Yeah.
Yeah. Which really talks about talent density, transparency, and just running. I think talent density to me is a really important concept, whether you're on the talent side or the ownership side. Building a great company is really about concentrating talent, organizing that talent, and I think that gets lost in the shuffle sometimes. So that's been a book that I go back to many times in terms of like a North Star, in terms of when I'm building a company, to make sure that we're always focusing on that, like transparency, communication, and building better talent all the time in that organization.
So I would say two things to answer that. One is, if you wanted to be a speculator or a trader, the greatest book ever written was written in 1929 called Reminiscences of a Stock Operator. And what's so interesting is the game in 1929 and the game in 2024 is the same game. And he went through all the pain and the lessons, and every great speculator I know. Paul Jones sold an annotated copy with all his notes in it. Everyone, that's their Bible.
Yeah.
But I would also say just reading books is wildly important. You show up at an interview like Sapiens by Yuval Harari is an interesting book because it frames the world, and then you have a different framework that you can go from, and you can reference. And so having a couple books that you own, that you know, is great to have in your arsenal.
Yeah, I was going to also say, I
like that point.
Yeah, I was going to say one other thing, because in that context, I was thinking about, kind of straight business, but for real estate, I think the book The Power Broker by Robert Caro is amazing. It's my favorite book of all time.
I thought you were going to say that.
Well, everybody knows that, right? Like it's specific really to real estate and politics, but it is an absolute classic called The Power Broker. In fact, I love it so much. I've read it a bunch of times, but for one of my birthdays, Mike's wife, Suki, actually got me an annotated original copy of it, which I have,
Wow.
Yeah, which is really, really cool. But by Robert Caro, it's an amazing story of this one man that reshaped New York City, dealt with all the
Park,
right. Central Park, LIE, Jones Beach, Lincoln Center, all these things he built, and dealt with all these politicians from LaGuardia to Rockefeller, and it's just a tragic. At the end, it's an amazing story, a little bit tragic, but it really teaches you to this day how politics and real estate and finance intersect.
All right.
Should we wrap it up?
Wrapping it up.
Guys, thanks a ton. Another episode, Business Untitled.
Talk about
None of us get gold.
Well, subscribe, whatever.
Talk about it.
I mean, I'm like,
We got to subscribe. We need more subscribers. You got to YouTube us. You got to email us. You got to listen to us on Spotify or Facebook.
You
That's
can tell
Mel's
he's
thing.
old.
Mel's
You got to
like-
YouTube us.
Mel's like-
What does that even mean? You got to YouTube us. Subscribe to YouTube, Instagram, Twitter, TikTok,
Spotify,
Apple. If I missed you, it's because you're not showing us enough support. But no, subscribe to us.
Thanks, guys.
Thanks,
Thank
guys.
you.